Hello everyone, welcome to the session. So in the previous session, we have learned a few things related to regarding initial public offering. What are the things that the necessary steps the company has to take before initial public offering? So there are two kinds of activities, pre-issue and post-issue activities. So anything that happens before a company opens the subscription list is called a pre-issue activities, and anything a company follows after opening the subscription list is post-issue activities. So subscription list is nothing but a list of investors who has asked to buy the shares of a company. So the pre-issue activities include compliance with SEBI guidelines before the issuing of shares, holding of a general meeting to acquire permission from the shareholders to issue shares, intimation to stock exchange in which the shares of the company is going to be listed. So I explained what is listing and everything. Listing means adding your company's name in the list of companies that has been whose shares have been traded in the stock exchange. So there are two main stock exchanges in India, BSE and NSE. Other than that, we also have state level and small level stock exchanges that are operating within a state or within a district, so on and so forth. So appointment, a company needs to appoint a bunch of people who will take care of the issuing process. The most important of all is the merchant banker. So the merchant banker is someone who provides services of listing your shares on a stock exchange. Basically they just take care of the issue of shares for the company. So the merchant bankers do that service as a profession. Therefore they are imagined to have a considerable amount of experience in that area. So therefore, other people include a company secretary, a registrar, underwriter, or any other kind of broker. Moving on, we will see drafting of prospectus. So before that, we need to know what is a prospectus. Prospectus is in other word called an invitation, except that in unlike any invitation, prospectus contains the details, the main necessary details regarding to the company that is important for an investor to for decision making purposes. For example, the prospectus is an invitation that will contain that it is an invitation that is asking the shareholders or investors to invest in the company, except that in that invitation the company should add all the information with respect to that company. That includes starting from the name, location, who are the directors of the company, and includes who are all the creditors of the company, how many credit is due, how much interest is being paid, how much assets the company holds, what kind of sales, how much sales is being done on an yearly or a monthly basis by the company, and if there are any outstanding loans that the company needs to pay, and if there are any shares that are convertible in the option of the company, so on and so forth. So all these information needs to be present because let us say you are looking at a prospectus of a company, and the prospectus says that the sales of a company in 2015 is 2 lakh units, and it is in 2016 it's 1,80,000 units, and in 2017 it's 1,60,000 units. So it clearly says that the sales of the company is dropping. So you will not want to invest in a company whose business is dropping. So therefore prospectus should show a clear-cut view of the financial position of the company. Even if the current financial position of the company is very stable, the prospectus will have enough information for the investors to ascertain the future financial position, using which the investors will guess how the company will perform in the future. So that is called a prospectus. Drafting of a prospectus simply means that what the SEBI, Securities Exchange Board of India, has issued some regulations on what are all the details that are necessary to be included in the prospectus. So drafting of prospectus means preparing a prospectus including all the information. Apart from notice of offer of issue of shares to the public, prospectus should also disclose Justification of premium, if called net asset value, high and low price of shares of the company of the last 2 years. High and low price means if the company has already issued shares, what is the highest price that the shares have been traded and what is the lowest price that the shares have been traded in the last 2 years. Net asset value means the total amount of asset that the company has minus the total amount of liabilities that the company has. So if you reduce the total amount of assets minus total liabilities, the company will have a remaining so and so number of assets. So if the liabilities are more than the assets, you will not want to invest in the company because the company has outstanding dues. So therefore people will not want to invest in the company, and a company will honestly not disclose such kind of information. Those companies will not even go for investing options where they have to disclose that kind of information. That's one thing. And yes, like I said, premium is something. Premium is an amount that is over and above the amount of the net worth of the share. For example, if one share of a company is worth 100 rupees, if the company is selling the same share for 120 rupees to the public, you might ask, why would somebody want to buy a share above its worth if it's not even worth that? It's not about the current worth of the shares, it's about the potential growth of the share value. So therefore people will be interested even if the share price is above what it's worth. So if a company is offering such a premium, they need to justify why they are offering such a premium, because you are asking for more money than what your shares are worth. Therefore you need to give an explanation with that. A clause that company shall refund the entire application money if minimum subscription is not received. So let us say a company wants to raise 10 crores of investment, and it sells 1 crore shares of 10 rupees each. So if you multiply 1 crore shares into 10 rupees, you will get 10 crore rupees. So if the company wants to raise an interest of rupees 10 crores and it sells shares of 1 crores of 10 rupees each, the company cannot just accept any kind of money that comes in. Let us say if you are issuing 1 crore shares, each of the rupees 10 means only 20 lakh people are buying. Out of the 1 crore shares, 20 lakh shares are only sold. So therefore you receive 20 lakh into 10 rupees equal to 2 crores rupees. Out of the 10 crore shares that you have created and you wanted to issue, only 2 crores have been invested, and the remaining 8 crore shares have not been bought by anybody. So you can say that, okay, anyways, those 2 crore people wanted to invest in the company, let's just forget about the remaining 8 crores. No, you cannot say that. The regulation permits that if and only if you are able to sell 90% of all the shares that you wanted, that you have issued to the public, then only you can call that issue as a legal one. Okay, otherwise you have to refund all the amount that you have received from the investors, which means that if you are asking for the public to invest 10 crore rupees, you must at least acquire 9 crore worth of investment. Even if you get 8 crore 99 lakhs 99,000, you need to refund all the 8 crores 99 lakhs and 99,000 and call that issue a failed one. So if you are not if you haven't achieved that minimum subscription, the company shall refund the entire amount. So a clause means a regulation needs to be added in the prospectus that if the company does not achieve minimum subscription, the company will pay the investors. Why it is happening is that the company might attract a small amount of investors but might fail to attract the whole investing party, the whole public. So in that case, a small amount of investors can unknowingly invest in the company without even knowledge about the company, and but the majority population will not want to buy the company shares. So to protect that small amount of investors and their money, the SEBI has included this regulation. So therefore, according to this regulation, the minimum subscription, which means the minimum amount of investment that you need to have acquired through a issue, which is generally 90%. If you haven't achieved a 90% subscription, you need to refund the entire amount that you have received from the public. And last thing, a statement by lead managers that their opinion the assets of the underwriters are adequate to meet their obligations. I mean, they haven't even said what underwriter means. Okay, underwriter is just a broker. Underwriter is a concept introduced by in the company law. Underwriters are brokers. Like I said in the last point, minimum subscription means the minimum amount of investment that the company needs to acquire so that they can call the issue a successful one. So what happens if you are able to acquire 8 crores 99 lakhs 99,000? What if just because of that 1,000 rupees you are going to have to refund 8 crore 99 lakhs, almost 9 crore rupees? So that is unfair for the companies. So to avoid that from happening, and also to even if that investment amount is really less than that, even if you are only able to raise 6 crore from the public, if only you are able to raise another 3 crores, you can call that issue a successful one. So to make that happen, underwriters are appointed. Underwriters are somebody who will buy lump amount of shares from a company and keep it temporarily, and they take a commission from the company for that on that behalf. So therefore, if the company has only managed to sell 8 crores worth of share, and it needs to sell 1 crore more worth of share, so then only they can call the issue a successful one. But if people are not ready to buy the 1 crore worth of share, the company will appoint an underwriter. This underwriter will buy that 1 crore share like a public, and then the company can call the issue a successful one. After that happens, the underwriter will find some investors in like 2 months, 3 months or 6 months after that, and then he will sell the shares of the company in the open market. So to do this job, the underwriter will be paid some commission. So that is the job of underwriters. And also that if the underwriter is not able to buy the 1 crore rupees worth of shares, but the company has asked the underwriter to buy the 1 crore rupees worth of shares, the underwriters should prove to the company that he has the capacity to buy 1 crore rupees worth of shares. If he does not prove that, the company will not appoint him as an underwriter, because the underwriters receive a fairly decent compensation for doing that. So some people will be greedy for that compensation, and even though they will not have the enough resources to buy the 1 crore worth of shares, they will sign up with the company as an underwriter, and then they will fail to buy the shares from the public. So therefore, to avoid that from happening, the underwriter should prove that they have enough money to buy that 1 crore worth of shares. So that proof needed to be included in the prospectus. So these are all the important points you need to note when it comes to drafting a prospectus.